All right. All right, all right. Big Chad's in the house, and you're in the house too. It's me and you together. We're just having fun. What is going on? We're trading crypto. We don't know what we're doing, but we're trying. We're having fun. That's kind of the whole point. That's why we're here. March 11th, 2022. I'm just thankful to be alive. I'm thankful for you. I'm thankful that you've decided to take some time out of your day to listen to me. I have some thoughts. I'd like to talk about the crypto market. Hopefully share some of my experience. Hopefully that's of value to you. I enjoy kind of the give and take. Let's just check in here with the chat room. We're a worldwide thing. What I'd like to do is kind of just hear from you where you are in the world. We're seeing what's up with Canada. We have Brazil in the house. We have hello from Earth. We're just intelligent animals living on this planet. And that's just what it is. So no doubt, planet Earth. Missouri, nice to see you. And ciao from Florence, Italy. Ciao to you. I learned a little Italian in college. I don't want to embarrass myself. So, and anyway, thank you for coming. Good to see everybody. Go Big Chads. I like those dance moves, the best dance. Thank you. So I kind of just like to dance. I like to make it kind of fun. Listen, trading's really hard. It's really hard to learn how to trade. It's really hard to trade. It's hard to teach how to trade. Like the whole thing's hard. So you try to learn from that and take notes along the way. Let's get right to it. I don't want to ramble too much. I have a plan tonight. I want to go over a little bit of the price action since the last time. Last time we did a video. As a reminder, I am on Twitter at Big Cheds. Academic observations about price, trading psychology, risk management. I am the author of Trading Wisdom, 50 Lessons Every Trader Should Know. The feedback's been unbelievable, 4.8 out of 5 stars. I really appreciate that. It's resonating with people. I'm proud of that. Kindle, audiobook, hardcover, and paperback. If you don't want to pay for it, I got you. I have your back. You go to my YouTube channel. I have the free version, Trading Wisdom, 50 Lessons Every Trader Should Know. One lesson at a time. I have 12. I will eventually have all 50 lessons for you for free. If you're brand new to trading, you do want to start with my tutorial educational live streams. These will get you from first base to third base. I mean, you'll be on your way. It'll explain how the charts work, how to understand a trend, a lot of the basic terminology. And if you want to understand what I'm talking about in these quick market updates, you have to start with the tutorials. If you're interested, I have a long form interview series, unbelievable guests, some of the brightest minds in this space. And I would like to have unscripted conversations with them. And they're great. I really definitely encourage you to check those out. I'm a founding analyst at Bitcoin.live, something I'm incredibly proud of. Been doing that for almost four years, twice a week, full market updates. I will not miss an update no matter what I'm doing. And it's a great team. So I'd really encourage you to check that out if you actually really want to learn how to trade, something I'm incredibly serious about. Let's check in with the chat room, friends. See how everyone's doing. Poland, Portugal, Austria, Singapore, Poland, Virginia. What's going on? Gold Coast, Australia. That's wonderful to hear. And Bolivia, India. I mean, look at this. Just like a regular guy like me. Guy like me. I have all these people all around the world. Look at that. Texas, Canada. Telluride. All right, okay. San Diego, Singapore. It's unbelievable. So Panama City. We're all in this together, right? We're all in this together. So what a life, right? What are we doing here with Bitcoin? So what are we doing, right? Are we above or are we below 40K? I mean, that's how I'll kind of orient my analysis, right? And kind of, if you want to understand why I say that and what my posture is, just go back and like just watch my prior videos. I'm pretty consistent with my method. But like if new information comes in, I'll change what I think, right? I have no problem saying I was wrong. Here's new information. And that's what it is. You use the best available information you have at the time. You recognize the trend. Bottom line, why am I on such a low time frame here? Let's go that. So the daily chart. I mean, the bottom line, we're in a corrective phase. We understand what happened last year, 2021. We understand 80-day rectangle, the equilibrium, high, low, break, higher high, double top with the higher high, and then the double top on the right, on this other peak here with its own up thrust, the outside bar, the follow through, the rollover, the loss of the moving averages, the mean reversion bounces, right? I've done this. I've done this now many times. So I'm not going to sport your patience. You need momentum. And like any bottom, I've talked about all this stuff I've talked about. Any bottom, you have to start with a potential lower high, and then you need some type of a lower high break. You need kind of momentum. That's all. That table's been set. So I don't need to do that right now. But I'll kind of try to walk you through what I've talked about on Twitter recently. And so we talk about the weekly candles interesting. I think this is interesting. I thought, what could I talk about? I talked about the idea of the weekly inverted hammer and kind of the concept of an inverted hammer. And the myth of the inverted hammer is a bullish reversal candle. I've never understood it. And it doesn't, and it's one of those things where I've read it and understand. Interestingly enough, the hanging man, if I invert this, the hanging man is also kind of a misnomer. Hanging man is is actually bullish, 59%. So you take this inverted hammer, it's supposed to be a bullish reversal. Like, what's bullish about this candle? Because it goes against all the other Japanese candlestick teachings that we understand, both from theory and from practice. You have bears rejecting higher prices. You have profit taking. You have a chronic in this case. You have let me just get rid of that. In this case, you literally have a chronic inability to close above the 8 EMA. And this is a weekly chart. You got 1, 2, 3, 4 attempts. Like, there's nothing bullish about that further inability to close above the EMA 8. Anytime you stick your head, you're in war, and that's a stone wall. And every time you stick your head above, like one of your buddies is getting a headshot. That's what that is. That's the 8 EMA 8. That's momentum. The bulls haven't been able to recapture that. So it's not a bullish candle. It's a bearish candle. It's a small real candle body. It's an attempted bullish bounce. And it's context. This inverted hammer comes after kind of this evening star with the shooting star at the EMA 8, the drop, the spinning top, all that good stuff, right? So it's not a bullish candle. This isn't a good candle, right? What does that matter? It just means, like, you need to understand, don't get excited, and don't, because we all kind of listen to other people. We all decide, like, who we listen to and the different voices we listen to. And it's almost like a council. We have all of our own, like, council of advisors, right? The people we follow on Twitter or social media or friends or whatever, people who help us, like, get a good sense of what's going on. And it's important to understand that people who are kind of pointing to that as bullish are not understanding momentum, are not understanding trends, right? It's important to be selective with who you pay attention to. There's a very clear delineator between people who understand momentum and trends and who don't. I try to. Sometimes I feel like I have it, sometimes I don't. But that inverted hammer, for sure, before you get excited, make sure to read this. And what do we have? The inverted hammer is supposed to be bullish reversal, but it acts as bearish continuation 65% of the time. All right. Checking in the chat room, folks. I'll allow you to read that for a moment while I just get caught up. I do want to say thank you real quick. Let me just say, I do want to say thank you. There are a lot of messages in the chat room. I'm not going to see them. It's just me. I don't have a team. I get all these, like, random emails from, like, groups and, like, your team this. I don't have a team. It's just me, right? So I don't see your messages, but I appreciate them. I'll read them later. All that good stuff. And on Twitter, if I miss your comments, I say it's not. I'm not ignoring you. I just don't see it. But I do appreciate that. So we have that inverted hammer on the weekly chart. So that's on March 6th. We're going to go to March 7th. So what does that mean? What does this mean, Ched? So I get a lot of, this is an opportunity for me to explain. And there's a scale of people who kind of understand what I'm saying, right? From those who completely don't understand to those who completely do. And then, what does this tweet mean? And so, that's why I offered the tutorial for you to watch and other ways to understand what I'm saying. 1H, 1 hour, rejected where it was expected. Why is it rejected where it's expected? This is a few days ago, but you want to understand, like, if you're trading low time frames and you probably are finding yourself buying right here and getting kind of caught up and enthused right at resistance and then getting stopped out later as you're buying into momentum. And you have to understand, where's that tweet? I could find it. It's not that important, basically. It's important, but I need to find in this moment. Basically said that if you want to go long, wait for a dip. If you want to go short, wait for a rip. And so, like, if you want to go long here, you're better off trying to kind of buy either at the lower Bollinger dip or in the confirmation of momentum break when you kind of break that lower high. But like buying like right at resistance, usually going to get burned. And here it's rejected where it's expected because it's a lower Bollinger to an upper Bollinger move. And that's just kind of a standard kind of a price oscillation within a corrective channel, and you're in a corrective channel and you're digesting all the prior moves down, and you digest those moves down, and within that digestion phase you have kind of attempted bounces that 9 out of 10 times will fail at kind of key levels, and it's just standard, and you follow it, you understand it, all right? And especially when you go to lower time frames, you can kind of see, quote unquote, how the sausage is made, right? So you get that 39.5. So later on in the picture, when we get to kind of what's going on right now, you'll understanding that like when Bitcoin breaks 39.5 here a couple days later, the fact that it's unable to hold it, that's a signal. You always understand that when a level is recaptured, when a level is flipped, but then unable to be held, like that's a big sign of momentum. Like you're a detective looking for momentum clues. Here, okay, it's rejected. Now we're further understanding that's a key level, right? That's a March 7th. So what happens next? So then we get here March 8th, right? Rising with equities and approaching key test again. So, I guess 1 hour daily. Let's see what's going on here. Maybe go a little lower. We'll try it out here. So, all right. So that was that. I showed you here to here. I showed you here to here. That was in that prior one right there. We just kind of looked at this move. And then so you kinda have the same thing again, except here you get the spring, right? And I think I tweeted that out. We have a potential spring where you kinda where you break a low and you recapture it, and boom, then you're right back into that level. So I think that's the level. You can see that. It's not too complicated, right? Generally right there in that area, right? So when you break it, you wanna see it hold, right? You wanna see it hold. We came back below, we rejected, we'll get to that. But you always pay attention to when a level is established and then not held after it's flipped. Like that's the sign of momentum in the other direction. So rejected where it was expected, equities rising, rising with equity. So Bitcoin started to rally, and in part, here we go. BTC running on rumor phase of executive order, tomorrow's news. So if you remember, there was right here. That's a pretty nice little pump. We started to rise because like I guess the executive order was leaked and it was seen as dovish, right, or not, kind of harsh. You sure do a lot of tweeting. Absolutely. It's fun. It's a dopamine thing. It's like I enjoy it, but I feel like I'm adding value, and it just I challenge myself. And you practice. I'm just trying to almost micro specialize in what I'm doing, and it's working. So I'm going to keep at it. And but I appreciate that. Appreciate you watching. Let's see. All right. So in any case, we were rising, right? We were rising on, and this is how I kind of understood it. We were rising on the reason this is important is kind of the buy the rumor, the sell the news. And so implicit in that tweet is I'm thinking this move is going to unwind at some point. So when you're getting really excited here, especially because you knew the following day that it was coming out, that you have to be careful. Don't go this A lot of what I do is I'm preaching caution because, like, it's really easy to get carried away, and it's predictably easy to get carried away in that kinda cycle of these pumps, and I showed you earlier in that 1 hour lower to upper move, and you kinda get excited right at resistance. It's human nature. It's hard not to get excited at resistance and to buy that pump rather than to buy the weakness in the pump. So we're rising, right? And um, basically here, this is a clue, right? So Japanese candlesticks work really well. You use it in concert with other things as well. But of course, we have a clue here. So March 9th here, 1H outside candle after an advance, right? Just an observation, March 9th. So what does that mean? So oh, here we go, 1H, and there it was. So that was this candle right there. Like, how good is that signal, right? 1H outside bar after an advance. right there. 1-inch outside candle after advance. And what does that mean? And it's not Japanese candlesticks. That's actually classical charting, right? But it's in concert with after an advance near the upper Bollinger, and it's a sign, and it's got the little up thrust as well. It's got a little up thrust, right? And you kind of understand you've been rising in anticipation of this news event. So, like, if you're trying to figure out, I mean, this is all like almost like trading. I'm showing you like the lifeblood of the 1 hour chart over like a week period, and you kind of understand how it moves in these lower time frames, also understanding the larger time frames. And I've done that before, the weekly chart, the MA50, the MA200, right? I'm not going to go into that now. But I think it's interesting to kind of look at this, and you see that clue, that 1H outside bar. And so what that 1H outside bar leads to the 4H tweezer, which is a Japanese candlestick signal, of course. 4H tweezer top, right? Let's clean that up a little bit. 4H tweezer at upper Bollinger Band, notable. Okay. 42,235. I mean, that's just like textbook. This is out of a textbook without question. Look at that note, and you've seen these tweets where I say candle progression. Note the candle progression. You have the Maribozu, the large, not exactly clean shaven with the lower with the shaven bottom and top, but more or less a Maribozu with the open and the close, basically a big green candle with no wick, a mega Chad candle, whatever you want to call it. Smaller body, smaller body, smaller body. Okay. Upper Bollinger. It's a little bit too fast, too soon. Boom, tweezer top. Right? Tweezer top, upper Bollinger Band. Ideally you'd have like a lot of resistance right here. So it'd be stalling at a logical level. I think resistance, in my opinion, is actually not that well defined from that 2 to 46K level. I just think given that momentum of how fast it moved in that period of time, it was a kind of a pretty potent candle signal, notable upper Bollinger Band. And then boom, what do I see there? It drops. So what happened, right? Those are the two. That was the tweezer we were just looking at. Right? That's our tweezer right there, and then we get the follow through in the tweezer, boom, right back to the pocket, right back to that key support, right around 39.5, 40K, and we get the outside bar, 4H outside bar after a drop, and it's a high wave spinning top. The volatility candle, it's kind of it's just a pausing candle. It's a candle that will, no matter what, it makes the trend that's in force, like it checks its game. It's like, let me see your ID. Okay, cool. You can keep going, but you still have to pass through the checkpoint. It's a speed bump. It's a no doubt about it. Speed bump. Here it is, right? We're kind of still ranging in that area, but I lean bearish on my interpretation because we're below 40K. So I'm still bearish in my interpretation, but now that we've got this outside bar, I'm still open to the idea that kind of that, maybe bears are running out of juice. But bulls need to kind of regain the momentum. So bears actually don't have to do anything because you're slow bleeding, right? You think about momentum. If bulls want a sharp drop, you get a sharp drop, you get volume, you get a resetting of the supply demand equilibrium, and then you can kind of get that V bottom. You can do, if you start your double bottom, you get that first trough, you get that first drop, and then maybe you get a second one, but you need volatility because the slow bleed doesn't do anything for you. It doesn't get you that bottom. So you need volatility. I'm ready for it. I'm prepared for it. We're below 30. We're below 40K means we can probably test 30K. If we can test 30K, right, we can break 30K. We can test the 20K area. We could drop below the 20K area and panic people and maybe test the top of those prior highs before we broke out, right? So I'm ready for all sorts of scenarios. I'm ready to buy at the MA200 weekly. I'm ready to buy at 20K. I'm ready to buy kind of if it drops lower, but I want to see it happen quickly. I don't want to see a slow bleed, right? A slow bleed to the MA200 weekly will probably lose it. I'd like to see a sharp drop and a bounce off of that. I'd like to see recapture the weekly MA50. Those things are all kind of they're still there. That's the bigger picture. And meanwhile, we're still trading in this kind of long rectangle. We had the 80-day rectangle back in July. We talked about that. We have more or less a 65, 70-day type of rectangle action going on. But bears have momentum. Bears have momentum, and they'll still have momentum until we flip 46K, right? So that kind of sets the table. That's how we're getting there. And then what do we have? What is it today? Today's the 11th. Just a little bit of low time frame candle weakness at key level. Be careful. We had a news pump about like a softening of. There was some like we're ready for talks or some type of pump that like everything was running and BTC was running with it. But there was candle weakness. There was low time frame candle weakness, right? Let's see. What is that? The 4 hour, the 1 hour. I was actually watching the 15-minute because I was trading it. Here we go. I was right there. Right here, low time frame candle weakness. And we had that high wave spinning top, and you had these kind of upper shadows, these kind of dual shooting stars. Boom, boom, that's a spinning, just a high wave. That's just a regular spinning top. But here, look at those upper shadows after the advance. LTC, low time frame, right? So that's what I'm saying. LTF, low time frame candle weakness at key level. And that was right at 40K. So it's like, don't buy that pump. Like, you got to stop buying that pump. If you're gonna at least, drop to lower time frame, kind of understand what's going on. The rule of thumb is you go to lower time frame when you're at a key level, right? So that's the way you do it. Low time frame, and here we go. All right. If I had to guess, 40% chance we see sub 30K in the next month. Yeah. I mean, why not, right? Like it's bulls. Bulls have to do something. Like bears are moving here. Bears have momentum. And it looks, I'd say, and it's one of those things where you don't want to put probabilities, but we're just having fun here, right? Just me and you, right? Just a couple friends talking. I'd say, I mean, it looks to me like 70% chance we test like the low 30K. And then if you test it, I mean, you get a pretty good chance of breaking it, given momentum. Trends tend to continue. Doesn't mean it breaks it right away, but you know, hopefully I'm wrong, right? But I'm ready to kind of I'm ready to change my opinion. We break above 46K, right? But if we drop, I'm not going to freak out. I'm going to kind of understand we have pockets of support. We have layers of support here on the way down. And we'll have to kind of switch to lower time frames, like I said, when we're at those key levels, and just kind of see what happens. Let's check in with the chat room for everybody. I appreciate that, folks. We got a lot of love here in the chat room. I appreciate that. All right. That was good. That's what I wanted to do. I did what I wanted to do. I want to remind you, you can find me. I am on Twitter at Big Cheds. I enjoy interacting with you. I enjoy hearing your feedback. And what I try to do is put out academic observations about the price, trading psychology, risk management. You get a lot of I'll look for things that stand out. I'll look for things that are worth sending out. I know some people have me on notifications. So I try to respect that. So I'm trying to give you key moments in time. You have a day job, so you can kind of understand what's going on. So I try to just cover what's important. Appreciate that. I am, of course, on YouTube. I appreciate your likes and subscribes on this video. The book is on Amazon. It's 4 formats, and I have a free version on my YouTube channel, the playlist Trading Wisdom. Check out. The first 12 episodes are available. I will have the full version eventually. Go to tutorials. These are great. I'm getting ready to do a new one. I'm in no rush. This last one was really good. I'm quite proud of it. But I have some notes. I'm preparing for the next one. The next one's going to be fun, and that should be in the next month or two. So look forward to that. Check those out. Check out my interviews. I just had a great interview with Bob Lucas, who is also a founding analyst at Bitcoin.live, the best in class educational platform for crypto. I'm really proud of being part of that team, providing really good market analysis for a while. We haven't really been surprised with what's happened in Bitcoin. Totally nailed the top. You can totally check it out. And I enjoy teaching people. I teach you how to fish. I'm teaching you how to trade. I'm not going to be handing you trades left and right. I'm going to teach you how to trade. And that's kind of what I really enjoy doing. So please do check that out. I hope everybody's doing well. Let me check the chat room one more time. Great work. I appreciate that. And so listen, it's tough, right? It's tough. Trading's tough. There's highs, there's lows. I've been thinking a lot about, I have my new book coming out in a few months or a couple months maybe, the trading quotes. So a lot of my kind of, the one thing I'm thinking about is the fact that the biggest losses come after your biggest wins, right? Because I've kind of had some trades like that in the last few months. So I'm thinking about that. I've been tweeting about it, writing about it. You have that big win, you get really confident. You get really excited. You think, I can't be stopped. And that will get you in trouble, right? That will get you in a lot of trouble because then you start maybe abandoning your rules, taking some extra risks. So it's that constant battle with yourself to maintain your risk management methods that are designed to keep you out of trouble. So just be cognizant, be careful with that. I'd say one big thing I would suspect, that's happening to many of you is you're having trouble. You're playing these downtrends. You're trying to guess when they're going to reverse. So I would kind of recommend you only stick with the best altcoins if you're trying to trade altcoins. Only play the ones that are above their blue line, the 200 moving average. Play the strongest charts. Anything that's below that, just avoid it. That's a downtrend. Stay away from those downtrends. They're going to get you in trouble. You're going to lose most of your money trying to guess when a chart's going to reverse, when you really could just be identifying an uptrend and buying the dip in an uptrend. So that's how you kind of want to orient your thinking. In any case, thank you. I really appreciate each and every one of you. We're going to finish off here with a little bit of music. I hope you're doing well. I hope you do know that I do appreciate you. I appreciate everything you do. Glad you're part of the team. All right. Let's get it going.